Opendoor heads into Friday's session with some new energy and a much clearer narrative than just a few days ago. After Thursday's regular session, the stock managed to claw back some ground in the after hours, rising by about 16 cents. And I think the catalyst for that wasn't random market noise, it came from something concrete. Interim CEO Shrisha Radhakrishna putting his own money into Opendoor shares at the end of the session, and then posting publicly that other board members intend to follow suit. That's a big moment for this story. Just a week ago, a lot of retail investors were voicing their frustrations online, saying the board was inactive, that there wasn't enough transparency, and that leadership wasn't doing enough to show conviction. Now, within the space of a few days, the interim CEO has made a public purchase of stock, and is signaling that other members of the board will soon show their commitment with their own investments. That's a dramatic shift in tone, and one that should not be underestimated. This is exactly the kind of thing that investors, especially retail investors, were asking for. They wanted to see the board have some skin in the game. They wanted to see leaders willing to back their words with action. And now, that's happening. This could be a turning point in terms of sentiment, because when insiders step up, it usually has a powerful psychological impact on the market. It says, we believe in the company, not just in theory, but with our own money. Let's zoom out and look at the technical side first. On Thursday, Opendoor stock had been under pressure most of the day, testing that $4 level that we've been talking about all week. By the close, it sat just above that level. In fact, $4 has really become the battleground in the short term. We saw $3.50 serve as the floor last week, then $4 became the new floor, and $5 emerged as the ceiling. Each time this stock consolidates, it seems to reset in a higher range, and that's exactly what bullish investors want to see. Aftermarket action gave us a bit more confirmation. The stock rose by 16 cents in the extended session, showing that buyers are still interested in picking up shares at these levels. And when you combine that with the insider purchase news, the case for a bounce heading into Friday becomes much stronger. This isn't just technical support anymore, this is technical support plus insider conviction. Now, I want to be clear, none of this erases the volatility. Opendoor is still a stock that moves in big swings. We've seen it climb 40% in a single day, and we've seen it drop double digits the next. That's not going to change overnight. So patience and perspective are critical. But what's important is that the long-term story hasn't been damaged by these swings. In fact, if anything, it's being reinforced. Let's talk about why. First, the insider purchase by Shrisha matters. This isn't just a token buy, it's a signal. It shows that the interim CEO, who has been hands-on in running the business during a turbulent period, believes enough in the future of Opendoor to buy stock. He knows what's happening inside the company, he knows the challenges, and he still decided it was worth putting his own money on the line. That says something. Second, his ex-post about other board members investing soon is equally significant. For weeks, retail investors have been saying, if the board members really believe in this company, they should show it. Now, it looks like that's exactly what's about to happen. This kind of alignment between leadership and shareholders can shift sentiment in a powerful way. It changes the perception from the board is inactive to the board is engaged and listening. And that builds trust. Third, let's not forget the broader strategic picture. Opendoor is still in the middle of a CEO search, with Spencer Stuart leading the process. The permanent CEO pick will be a major catalyst. In the meantime, though, Shrisha has been building credibility by engaging with retail, posting updates, and pushing the company's AI focus forward. He's talked about tools like Repair Copilot, Risk AI, and the Key Agent app, products that can streamline operations, cut costs, and expand the reach of the platform. By weaving AI into its strategy, Opendoor is showing that it wants to be not just a real estate company, but a real estate technology platform. That's important, because the original iBuyer model, while innovative, was capital-intensive. It required Opendoor to buy homes, hold them on the balance sheet, and take on risk. The future needs to be asset-light, more like Airbnb or Uber for housing. Monetizing the seller funnel through agent services, financing options, and tech-enabled tools is how Opendoor scales without tying up billions in housing inventory. This is the pivot that can create sustainable margins and long-term growth. And then there's the macro backdrop. Mortgage rates are still high, but the expectation is that rate cuts could come later this year, possibly in September. That would directly benefit Opendoor by sparking more housing transactions. Remember, this company thrives on activity. The more people buying and selling homes, the more revenue flows through Opendoor's platform. Align a more favorable housing market with the company's asset-light pivot and insider alignment, and you've got the ingredients for significant upside. So as we head into Friday's session, what should investors be watching? The first thing is the $4 support level. If the stock holds that level and builds on it, that's a sign of strength. If it breaks meaningfully below it, we could see more volatility. But with insider buying and aftermarket strength, I think the odds of holding $4 are better now than they were earlier this week. The second thing is volume. Are we seeing strong participation when the stock moves up? That's key. If buyers step in with conviction, it confirms that this isn't just a technical bounce, but real accumulation. The third thing is sentiment. Watch how the retail community responds to Shrisha's move and his ex-post. If confidence grows that the board is finally engaging with shareholders, that could provide a tailwind for the stock. And the fourth thing is patience. I keep coming back to this because it's easy to get caught up in the day-to-day swings. Eric Jackson's $82 target has been thrown around a lot, but it's not a near-term target. It's a long-term vision. Getting there requires execution, leadership, and favorable macro conditions. It won't happen in a straight line, but days like Thursday remind us that the story is still evolving in the right direction. To wrap it up, Thursday's aftermarket move was about more than just cents on a chart. It was about conviction. Conviction from leadership, conviction from the board, and conviction from retail. We're seeing alignment start to form, and that's powerful. The $4 support is critical, but the real support comes from insiders willing to invest their own money and a community that remains deeply engaged. That's what sets up the next rally. So heading into Friday's pre-market, I remain bullish. Volatility is part of this stock's DNA, but the path forward is clear: leadership engagement, asset-light strategy, AI integration, and macro tailwinds. Add insider buying to the mix, and you've got the foundation for upward movement. For me, that's enough to stay the course, and even add when the opportunity presents itself. The story of Opendoor is still just beginning, and the best chapters may yet be ahead.